Hey everybody, Artwood Mortgage Team, your favorite mortgage guy. If you didn't know, just ask me, I will tell you. So the numbers are in. Friday, the BLS jobs report came out, and it was a head scratcher. Starting to wonder where the hell do they come up with these numbers. So let me explain to you a little bit. So we were expecting 125,000 jobs created. Now, if you looked at what the ADP report said earlier, a couple days in the week, ADP said there were only 39,000 jobs, private payroll jobs created, and for the month. So we're thinking, all right, we're expecting 125 for the BLS. That's horse crap. There's no way that's going to happen. So guess what? It comes out at 137,000 jobs created. How is that? I don't know. It came from hospitality and health. I'm sorry, the health field. So that's where most of the numbers came from. The other weird piece of the puzzle is the ADP number that's only showed 39,000 jobs created does not include government jobs. So you're like, great, maybe there's 100,000 government jobs that were created, and that would make up the difference between 137, sorry, the 39 and the 137. Well, that's not accurate either, because the BLS jobs number that came out Friday actually said there was a slight reduction in government jobs for it. So government jobs. So where the heck is this extra 100,000 jobs coming from? Now, the frustrating thing to me, from a mortgage standpoint, from a somebody looking for a mortgage, is that we know they're going to revise them down lower. Now, I couldn't do this from memory, and I don't know how to put it on the phone, so you could see. But if you look at January, they reported 143,000 jobs created. After the third revision, actually, only 111 jobs were created. In February, they reported 151,000 jobs created. And after the third revision lower, there were only 102,000 jobs created. And then March, which is the only one that we've had the 3 months to go back, they reported 228,000 jobs created. After the third revision, only 120,000 jobs were created. So what kind of methodology is this that they're using? It's ridiculous. It's antiquated, it's terrible, and it's not accurate. And what it means for borrowers and for mortgage professionals is that each one of these, this entire year, when they reported higher employment, more jobs created, that the bond market sold off. Rates got worse. So if you look at it, we lost 32 basis points, 23 basis points, 75 basis points, and we ended up losing like 28 basis points on Friday. That equates to 0.5% in mortgage rate because of inaccurate numbers. And it's driving us up the wall, because if you look at what the feds are looking at, they're looking at jobs. And if they keep getting inaccurate reports, then they're not going to lower rates, because we seem to have inflation cooled. It came in, if you remember, at 2.1%. But now, if their mandate were like, hey, we only had 39%, you would have seen interest rates go down, because they're looking to cut. Because they look at two things. They are dual mandate. They look at inflation, and they look at jobs. And right now, we're getting great jobs numbers, but they're just not accurate. So yes, I'm a little frustrated, because you come in and as a advisor to your client, you're going, hey, I'd float. We only showed 39,000 jobs created. But now you have to lock in every jobs report, because it's a bunch of crap. Then you got to wait for it to come back. So yes, frustrated, but I'm here to educate you on the things that need to be changed. And I would love to turn your mortgage into a work of art, even at 7% interest rates. So hope y'all have a great one. Take care.